Hey, what is going on, ADPI Nation? I'm your host, Kevin Brenner, and an incredible guest. I say that every single week, but truly this week we brought back one of the most well-respected real estate investors in the country. His name is Rod Khleif. If you haven't heard of him, you heard of him now because his story is absolutely incredible. He's been doing this for, I don't know, eons, and it's just so awesome to bring him back. He was actually on the ADPI podcast way back December 1st, 2018, on episode 47, and this is now episode 289. So we've had a couple episodes in between there, just a few, but we talked about then, his story, and we're going to recap that for you. But really, this episode, we are going to dig into the future real estate market, and we're going to look macroeconomically, and we might get a little technical. So if that scares you, hold on to your butts. All right, because this is going to be really, really fun. Rod, welcome to the show, man.
Oh, thanks for having me back, Kevin. Let's have some fun today, brother.
Yeah, so let's get into it. Right off the jump, can we tell the people who have never heard of Rod Khleif? I'd like you to just to summarize, kind of
Yeah,
your
yeah.
story and
Just a
jump
quick
into it. Yeah.
background. Yeah, quick background. So I'm an immigrant, born in the Netherlands. Wooden shoes and windmills. Immigrated when I was 6 years old with my brother Albert, my mother's Vansha. Ended up in Denver, Colorado. Really struggled initially. We didn't have a lot of money. I remember, eating expired food that we shopped at an expired food store. Believe it or not, they had that. And drinking powdered milk with our cereal in the morning because it was cheaper than real milk, which, trust me, sounds better than it is. Remember wearing clothes from the Goodwill and the Salvation Army all the way through junior high school till finally, when I was 14, I lied about my age of Burger King because I was tall and got a job flipping burgers. Now, you may have listeners that had it harder than I did or even have it harder now, but I knew I wanted more. And luckily, my mom had an incredible work ethic. So she babysat kids so we'd have enough money to eat. And she was a bit of an entrepreneur. She invested in the stock market successfully in IPOs, and she also invested in real estate. And her first real estate acquisition was the house right across the street from us when I was about 14. She paid about 30 grand for it. And then when I was 17, she told me she'd made $20,000 in her sleep that had gone up in value 20,000. I'm like, what? You made 20 grand? You didn't do anything? Screw college. I'm getting into real estate. So I got into real estate and I still lived at home. My first year I made about 8 grand. My second year, maybe 10 grand. But my third year I made over $100,000, and which back in 1980 was some pretty decent change. And so what happened between year two and year three that caused me to 10x my income? Well, what happened was I met a guy, I was dating his daughter, and he taught me about the importance of mindset and psychology and how really 80 to 90% of your success in anything, from relationships to business to anything, health, is your mindset and your psychology. And so, fast forward to today, I've owned 2,000 houses that I've rented long term. In 2006, my net worth, and I've owned thousands of apartment units and own thousands now, but in 2006, my net worth went up $17 million while I slept. And you might say, wow. And I said, wow. And I got a head so big I could barely fit it through a door. I thought I was a real estate god. And when that happens, God of the universe will give you a nice little smack. Well, that was 2008. I lost $50 million conservatively in 2008. And so, what I'm known for talking about on my podcast and my boot camps that you've suffered through, Kevin, that is mindset and psychology, and really the mindset it took to have 50 million to lose in the first place, and then maybe as importantly, or maybe even more importantly, the mindset it took to get back to where I'm at today after losing it. So, but we're going to go technical today. So,
Yeah.
if you want to hear mindset, go to my podcast called Lifetime Cash Flow. I'm blessed to say we're about to hit 16 million downloads, which just blows me away. But I talk about mindset a lot there. So, yeah, let's go ahead and fire away with the questions, brother.
Yeah, yeah. So even before we do that, I really want to hit on the mindset. And by the way, guys, you should listen to Rod's podcast because it is
Thank you.
absolutely, absolutely incredible.
Thank you.
But I was recently, we have our own students and everything, and a lot of them, and I'm sure your students too. They talk about analysis paralysis, and they
Hmm.
talk about just getting stuck in this. I don't know,
Well, I'd
in
love
this.
to talk about that if you give me
Yeah.
give me a few minutes. All right. Well, so I mean, I'm really proud of something, and that is I've been teaching about 5 years, a little over 5 years, but just barely over 5 years. My students now own upwards of 150,000 units that we know of. Now, these are my coaching students. That doesn't even account for the boot camp attendees. And And I'm really proud of that. And the reason for that is because they actually take action with what they learn, and if you come to one of my boot camps, and I'm going to give you guys a phenomenal deal to come to my next virtual boot camp, but if you come, you'll find that we spend some time on mindset. In fact, the first thing we do is goal setting on steroids, because how do you get anything if you don't know what it is you want? And what you've got to do is you've got to create what Napoleon Hill in his book Think and Grow Rich calls a burning desire. You got to want it. Okay. And that's how you get past analysis paralysis. That's how push past fear. That's how you push past limiting beliefs. A lot of us have limiting beliefs. When I immigrated, I got thrown into school. And I was 6. I didn't speak English. And I found out what bullies were for the first time. I hadn't learned how to fight back. So I got my butt kicked regularly. And then my mom, God bless her, proud Dutch woman that she was, thought it'd be a great idea to send me to school in wooden shoes and those leather shorts the Germans wear for Oktoberfest. So I got my ass kicked again. And then, there were
But
some
you look
bullies at the
good
end.
doing it. You look good doing
Right.
it.
Yeah. And then there were some bullies at the end of our street, and she would chase them off with a fly swatter. So the next day, butt kicking. And so I came up with this belief system that I wasn't good enough. A lot of people have these limiting belief systems, like I'm not good enough, I'm not strong enough, I'm not analytical enough, I don't have enough time, I don't have enough money, whatever. And there's a reason the acronym for belief systems is BS, because 99% of them are BS, but we believe they're real. And that's why you've got to have solid goals, and you got to know why the goals are a must. You got to have your whys clearly defined, because that's how you push through that crap, the fear and the limiting beliefs. Or maybe you're comfortable. A lot of us are comfortable. In fact, probably a lot of people in the military are comfortable, and that comfort zone's a nice warm place, and nothing freaking grows there, right? So you
Hmm.
got to really get clear on what you want, and use that to push through all of that stuff and get out of analysis paralysis. And I'll mention a couple other quick things. Once you've done your goals, you've got to make a decision. And I'm going to tell you, it's not a dipping your toe in the water thing. It's not a 1 foot in, 1 foot out sort of thing. It is freaking done. When you decide, it is done. And that could be the biggest decision of your life. It could be to take action on what you're learning in the podcast here, and I'm going to tell you, I believe, and we're going to talk about this, I believe the what is about to hit the fan. I think we're going to have some real pain in this country. The headlines, are starting to become more onerous, and I'm a real bear, and I really believe it's going to get ugly. And so, if there were ever a time to pick a vehicle on how you're going to capitalize on what's coming, because it could be the greatest transfer of wealth we see in our lifetimes, but you got to be ready. Okay. So, maybe you buy businesses. I think there'll be a great opportunity to buy businesses. We were talking about it before we started recording, the silver tsunami. There's a lot of people that are retiring that own businesses. So that could be an option. Could be buying real estate. If it's multifamily, get your butt to my boot camp. And, I'm going to let you come for $47. So it's kind of a no brainer, but I'll tell you about that later. But the point is, pick your vehicle and learn it right now, because if you're trying to learn it in the thick of it, it's going to be too late. Okay, you've got to build relationships, you've got to learn some of the technical pieces, and so on and so forth. And so you got to decide, like, make that decision right now, and then you have to take the first step. And Dr. Martin Luther King said, you take that first step in faith, the next step will be revealed. Lao Tzu, thousands of years ago, said the journey of 1,000 miles begins with a single step, but you got to take it. And it can be the scariest step of your life, but you make that decision, you take that step, and you're on your way. And yeah, and then I would just tell you, if you're going to do multifamily, play to your strengths. There's a lot of different hats you can wear in the multifamily business. You can be the one that finds the deals. You can be the one that finds the money and brings in investors. You can be the underwriter if you're analytical and you love spreadsheets. That could be your role. So a lot of hats you can wear. You could do the asset management if you've got some construction or project management or really management experience of any kind. So there's a lot of places, but you want to play to your strengths. Why? Because if you're playing to your strengths, first of all, you're going to enjoy it. You're doing what you love,
Yeah.
and work is play, and you never work another day in your life. But as importantly, if you're playing to your strengths, you're going to be passionate about it. Okay. Can you tell I'm passionate? I freaking love what I'm doing here. And if you're passionate, you'll have the ability to influence people. And this business is a team sport. Multifamily, if that's what you're going to choose, is a team sport. Now, if you're doing single family, you can do that on your own. I bought 2,000 houses on my own. I had some employees, but it was me. But multifamily, no way. That's something you do in a team. And so, but you want to play to your strengths.
Yeah.
So anyway, I
And
could keep going, but there's a few mindset pieces.
yeah, I mean, tons of nuggets that you just dropped there,
Right.
but ultimately, that education is going to make the fear of the unknown that stops us in analysis
Yeah.
paralysis. That first step in education whether you're listening to this podcast, you're going to Rod's boot camp, you're doing something that's going to set the tone for you and push you forward.
Yeah,
And
well,
that it makes it just demystifies everything.
and doing your goals. Okay, so even
Mhm.
if you're not interested in multifamily, you've got to do your goals. So if you if, I do it every year, January 1st or 2nd. I did it on January 2nd this year. If you go to rodslinks.com, at the bottom, that's my link tree. I've got all sorts of free resources there, but at the bottom is my goal setting workshop with a guide you can download. Doesn't cost anything. I'm not going to try to sell you anything, but do it. See, do it with your spouse too. If you got kids over 10 years old, have them do it. See, here's the sad reality, Kevin. People spend more time planning a freaking birthday party than they do designing their lives. That's designing your life. And so, go to rodslinks.com, go to the bottom, you'll see the goal setting workshop. There's free books there, and my boot camp website's there. Let me just mention right now, if you want to come to my boot camp, it's 47 bucks. Use the code ADPI to get that $47 price, and
Love
it's
that.
2 days. I don't sell anything there. Kind of a no-brainer. Okay, if you're interested in this business, I believe it's May 6th and 7th. It's virtual, it's a weekend. And you also get the recordings. I forgot to mention that, Kevin. You get the recording. So if you can't make it, you get that. You get my Finding Deals course. You get a bunch of cool stuff with it, bonuses. But if you're serious about this business, get your butt to that boot camp, because about multifamily, not single family. This is just multifamily. But if you're interested in that, definitely want to go there. And remember the code ADPI. But Rod's Links is where you want to go. A bunch of free resources. The goal setting guide is there. But if you come into the boot camp, that's the first thing we'll do. So you don't have to do it in advance of that. But again, have your kids do it. My God, set them
Mhm.
off on the right foot, pointed in what they're looking for. So anyway,
Yeah.
I'll stop yapping here. But
Yeah, yeah, and guys, I've been to Rod's boot camps before. They're fabulous.
thank you,
Just everything that you
thank
do,
you,
everything you put forward is just awesome.
thank
Uh,
you, buddy.
let's talk a little bit about the future of real estate here, and
Okay.
and figure out where we are in a market. I know you mentioned earlier that you're very bearish. I kind of
Hmm.
I share a lot of that sentiment.
Hmm.
I just came from a big event in Tahoe with GoBundance, and
Hmm.
we had a whole Bulls versus Bears competition kind of a thing, and there was a straw
Hmm.
poll, and there's hundreds of people in the room, and it ended up bearish, where people felt, and ultimately, we're going to bring this a little technical here, to you in the multifamily space, in the commercial space, which is where your primary focus is these days. What has happened, in your opinion, that is causing you to see a bearish market right now? And
Well, it
just
just it just smells like 2007 all over again to me, candidly. And I'm going to tell you, we've already seen hundreds of thousands of people laid off in the tech industry.
Mhm.
Um, Walmart just put out there they see the signs of a recession. It literally was in the news today. It was on Fox News today about Walmart. People like Jamie Dimon, head of Chase, has said it's going to be a severe recession. Um, you know. Um, and the feds are going to continue to raise the rents. Elon Musk said if they keep her, if they need to stop raising the rents, or it's going to be a severe recession. Elon Musk, pretty smart freaking guy. Um, so here's a headline right now on Fox: Fed to raise rates again as inflation rears its ugly head. Well, here's the problem. That's not going to solve the problem. Okay, what caused the problem was they printed too much damn money, and then these idiots with this 1.7 trillion thing they just pushed through. It just the stupidity is endless. But that's the problem: it's too much liquidity, and so the rates aren't going to help it. And so listen, it's completely different than 08 and 9. People are like, well, this is not 08 and 9. No, you're right. It's completely different, but there are still a lot of issues. And the biggest issue is inflation. It's killing people. I mean, the gas prices and the price of eggs, for example, just insane what's happening. And it kills me because I'm in a lot of cash right now, because with crisis comes opportunity, but you need to have cash or access to cash. Now, the beautiful thing about my business, multifamily real estate, is yes, they take money, but it doesn't have to be your own money. And there's
Mhm.
always money looking for a home that's getting killed in the stock market. In fact, there was another. I should have captured some of these. I didn't realize this is what we were going to talk about. And forgive me if you sent it to me. I've been so slammed. I've been out of the country and I'm going out again. But one of the things that they're talking about is who was it? The head of oh God, big outfit, big financial outfit. Oh, I can't believe it. It's right at the tip of my tongue. But anyway, they just declared that they're anticipating a 26% decline in the stock market. That was
Yeah.
just in the headline on Fox like yesterday.
Yeah.
So,
Talking about like what has happened. So, breaking this down a little bit for our listeners here, the what's been going on over the past 10, 15 years in commercial real estate. We talk about this thing, we talk about this cap rate compression. Cap
mhm,
rate compression, cap rate compression. Well, what's happening is that ultimately a lot of people have been moving into the multifamily space. So post 2008, you learned, you're like, hey, I was way too much into single family, but then
mhm.
your multifamily units, you're like, oh, they didn't hurt, I didn't get stung as much here.
Oh, I
And
didn't
then
get
you
stung. No, I could have easily survived in multifamily back then. My problem was I cross collateralized packages of houses with apartments, so I lost everything. But it was the
right.
houses that pulled me down.
Right. So
So,
so the house so the single family was pulling you down,
right.
and the commercial was floating you. Well, since then, a lot of people realized that and they moved to commercial, right? They're like,
Mhm.
"Oh, okay, well, we could do this." Well, and the investment started happening, and because of that, as the market got hotter, these properties, they started to become overvalued, and where you could once get 7, 8, 9, even 10 caps in 20 and 30 unit apartment buildings, they would go down to like 5,
4,
6, 4,
4.
4
Yeah,
in larger commercial, like, just ridiculous, right?
right.
And, well, there's a lot of people who still wanna get into this. They understand the value, and they think it's gonna continue to go up, and they say large commercial multifamily is, quote, unquote, "recession resistant." To a certain point, it's
Well,
better than a lot it's better than a
if
lot of
you didn't
assets.
overpay, if you
Yeah,
didn't
exactly.
overpay,
If you didn't
but
overpay.
here's the problem. Let me tell you the problem. Okay, so a lot of people, Fannie Mae and Freddie Mac, which are the biggest outfits that
Mhm,
loan in the space that I'm in, which is larger multifamily. They lowered their loan to value down to 60%. Like that's all you can get right now is 60%. But and they lowered it quite a long time ago. It steadily went low, and so people were using what's called bridge debt, which
mhm,
is the hard money equivalent in the commercial space, like hard money lender in the single family space. That's bridge debt in our world. And here's the problem. And so these operators would use bridge debt to get the higher loan to value, but the
yep,
problem is bridge debt was really put in place to bridge the gap from a non-performing asset to a performing asset, but they abused it to get the higher loan to value, because if they get the higher loan to value, they can show higher returns to their investors because there's less money out of pocket. There's less equity in a deal. And so the less money you put in a deal, the returns are higher. And so they use this bridge debt. Here's the problem. Bridge debt is short term. It's 3 year. It's adjustable rate. And some of these guys didn't even get rate caps. I know one guy that went from 3 to 7%. Okay.
yes,
That's what's happening right now. Even with a rate cap, a 2% increase on a multi-million-dollar loan is a big deal. Okay. And a lot of these bridge lenders require reserves. I have one guy in San Antonio we're looking to buy in his asset, and his monthly reserve payment, because his loan's getting close to being due, went from 8,000 to 80,000 a month. Okay, there's
wow,
one example. I met a guy. I was at Grant Cardone's GrowthCon last week, and I met a guy who is a really good operator. Okay, he is a seasoned good operator. I admire him. Okay, which I don't say about a lot of people. And he told me he's got 10 loans he is freaking out about. Okay, 10 assets that he's got bridge debt on. And so, even if it's a mild recession, there's going to be opportunity in the multifamily space because a lot of the loans that were done the last couple of years were bridge, and so a lot of problems. And I believe there's going to be some carnage, and I think it could even, I mean, people like Kiyosaki, of course, he's been talking about a crash forever, but he's talking about it
it's been
being
talking about a
really
crash
big.
for 40 years, but
Eventually, he'll be right, right. But
yeah,
even Trump, love him or hate him, said that they're lying to you. It's going to be a much bigger crash. He said it could be as bad as the Great Depression. That's
yeah,
a quote from Trump. So I'm looking at the Fox right now. I pulled it up on my screen. Fed rate hikes will have depressing impact on earnings. Jonathan Murray. I mean, there's all sorts of negative stuff coming out, which we expected. But when Amazon lays off 10, 11, 12,000 people, and they're talking about laying off more based on their reviews, employee reviews. I just read that they're talking about laying off more. Amazon, for God's sakes, a lot of layoffs happening and a lot of layoffs projected, and a lot of hiring freezes.
mhm.
So,
But
those are the
let's
sorts of things that start to build up,
yeah.
and you start to see some real problems.
Let,
So,
let, let's talk, Rod, about, because you touched on a lot there, and I want to
mhm,
unpack it and
okay,
make it consumable. So,
okay.
you talked about bridge debt, which I think is a huge problem. And if you
Right.
talk to, if you're listening to this podcast and you're in the multifamily space, maybe you're in the military multifamily academy, and you're,
Mhm.
you're you're talking to Tim Kelly and Adam Labar, they're telling you the same stuff. And really, you talk to these brokers out here, and these brokers are going and they're hunting for deals because they know that this bridge debt is coming due, and they're going to try and get it before it goes into foreclosure.
Mhm. Yeah,
And
me
there's
too.
going to, yeah,
Me too. I put
exactly.
together a whole team, a whole opportunity team to take advantage of that. I mean, I've got a team of well, gosh, 8 or 9 people. I'm
Yeah.
gearing up. Yeah.
Yeah, just getting ready and getting prepared to take down these deals. So where does the recession, people losing their jobs, just where does that play into the multifamily space?
Great question. C class assets. Okay.
Hmm.
Who are the people that are going to get hurt the worst in this? Not people like you or me that have resources. We have money. We have pretty good income. It's going to be the people that are paycheck to paycheck that
Yep.
are in a C or D asset. Those are the ones I get hit up all the time. Hey, you want to take a look at this deal? Not if it's a C. Not right now. I want A and B only. Because again, there's A, B, C, and D. A is brand new, the great stuff. D is the hood. Okay. And don't do D. Just trust me. Ask me how I
Not worth
know.
it.
Okay. Just don't do it. It's not worth the brain damage. I've had people killed in them, around them, and you name it. I could tell you stories that make your hair curl. But, but, but A and B is what I'm looking at right now because I really, gosh, a lot of people, they can't afford the gas. They can't afford the inflation. Here's a Walmart CEO on food inflation. You know, they're seeing their earnings go down because people are slowing down. Goldman Sachs, 3 more Fed rate hikes this year. Okay, I mean, existing home sales have fallen through the floor. These are headlines today. Okay, I don't know when this will air, but and, and here's another thing that's very scary: debt.
Hmm.
Our debt has never been higher as a country. And here's another headline: Yellen warns U.S. will hit debt limit next week. I mean, we can barely pay the interest on our debt. We're going to have to borrow money to pay the interest as a country on our debt. That's some scary shit, it just is. So,
Yeah.
but listen, it's not a time to be afraid, honestly. And it's hard for me because I lost everything. So this is painful for me to think through and everything more than most people. But I'm telling you, there will be incredible opportunity because everything's going on sale. And so, even if it's not as bad as I think it's gonna be bad, but it could be really bad. I hope it's not because it'll be really painful for a lot of people. But there's still going to be incredible opportunity. And so, like I said, pick a vehicle, learn it right now, don't wait. Okay. If it's going to be buying businesses, go find somebody who teaches that. If it's going to be single family, find somebody who teaches that. I don't know if you guys do that, but
Absolutely.
multifamily, I know you guys do that as well. And or you can come to meet mine, whatever. I don't care where you go, but learn it right now because otherwise, you're going to miss the opportunity. Back in 2008 and 9, I was hiding under a rock because I just had my butt handed to me. And, if I hadn't been, I'd probably be on the back of a yacht right now because there were exponential opportunities to capitalize back then. And in fact, if you listen to my podcast, a lot of the early interviews that I had with people that started in 10, 11, 12, that have, 5, 6, 7,000 doors, that's a clue. They started in 10, 11, 12. Okay. And so, that's kind of that was a recurring theme for a long time on my podcast because, that was the target rich environment, which is coming. And there were a lot of operators, by the way, Kevin, as well, that were brand new, wet behind the ears doing these deals. They didn't raise operating reserves. Like we do 6 months of expenses. We don't touch it. It sits in the bank just in case the, what hits the fan fund, which is happening. Being super aggressive on their, on
Their
their,
underwriting.
on their underwriting, exactly. Not stress testing a deal, not looking at what break even occupancy is, not looking at what the exit cap rate would be, because you got to calculate what the cap rate will be and what the interest rate will be depending on how you're going to do your you know what's the word I'm looking for,
Your valuation.
well, not just your valuation, but if you're going to sell or
Oh,
refinance it,
disposition. Your
just yeah,
disposition.
disposition. Thank you. That's the word I was. Your disposition. If it's going to be a
I,
sale
I
or
I
a
learned that
refi.
word from you, Rod. So
Did you? Well, there you go. And I forgot. I'm old, so shit falls out of my brain all the time. But so you've got to calculate what you think the cap rate will be and what you think the interest rate will be. And a lot of people were super like aggressive, like, oh, it's not going to go up very much or
hmm
if at all. And of course, it's eclipsed. it's doubled. Hell, we got a loan in the 3% range, and it's at 5.6 now at a deal we're looking at, which is a lot of money on this is a $40 million deal that we're looking at right now. So again, um, a lot of onerous stuff that's happening right now, and I'm not trying to scare you. I'm trying to get your eyes wide open to to capitalize on it. You can do it on the side, even if you're active duty. You can absolutely do it on the side. I've got students that have done it uh, in the hierarchy at ADPI, even students
Mhm.
and awesome students and other lots of other military people in my ecosystem that have absolutely kicked butt in the business. But the key is to get up to speed immediately.
Yeah.
Just get that message. That's
So,
all.
this, consider this. You're listening to this. Consider this your warning from
Yeah.
an expert. And like, we don't want to scare you, just like Rod's saying,
Get
but we,
excited.
yeah, you get excited. Exactly, get
Yeah.
excited. For folks who have assets right now, and maybe they have single family, small multifamily, stuff like that. Where are you at with, should folks consider liquidating those and saying like, hey, especially if they're C
They
class?
they kind of missed the window. I mean, maybe you can still sell your single family. There's still some movement there, but those sales have fallen through the floor. Okay, but you kind of missed the greatest opportunity, which would have been 6 months ago. But you know, cash is king in what's coming. So maybe a line of credit. The only thing I would tell you is if things get really bad, extend the line and don't have the money in the same bank that you have the line of credit, because back in 08 and 9 those lines have a clawback provision, and if they lower the amount, they can take the money right out of your bank account if it's at the same bank that you have the line at. So access to funds is what's important. But here's the thing to remember: it doesn't have to be your money, like I said. And I teach this on how to talk to investors, how to allay their fears, because there will be exponential opportunity for returns. But investors are fearful right now. Heck, Kevin, you said you were. I mean, even when we first started, you're holding on to some stuff right now, and a lot of investors feel that way. But I'm going to tell you, when I hate the expression, but when there's blood running in the streets, that's when we want to pounce, because there's going to be exponential opportunities to really have some incredible returns on our money buying those assets. But you got to have, in many cases, cash or access to cash. So again, you learn this business so you can talk to people and let them know, hey, we're getting ready, we're excited, there's going to be deals, and I'm always looking for partners. And if you know anybody that might be interested in partnering, let me know. And of course, you want them to say, yeah, I'm interested. And that's called an elevator pitch. That was a 2-second elevator pitch, but something like that. And again, I teach all this, and I'm sure you teach it as well. This is all stuff in my boot camp. And in fact, I even give you a sample deal package, I believe. In fact, I know I do, that you can say,
Hmm.
hey, this is an example of the kind of stuff we look for. So if you're not really great with talking to people, hey, you can lay that on the table, say, hey, keep that. And if we find something looks like that, let me know if you'd like to hear from us.
Yeah, 100%.
Yeah,
Uh,
yeah.
the, so when we talk specific asset classes with this new wave,
Hmm.
where do you think the most growth is going to be? Because in coming out of the last recession, we saw multifamily take off. Then we saw self storage.
Hmm.
And now you look at self storage cap rates, and they might be like a point behind multifamily, not that great,
Self
you know?
storage is awesome. No, self storage is awesome. People love to keep their junk. I'm guilty. I have a 6 building compound here, and I've ran out of room. It's ridiculous. Honestly, it's ridiculous. But so self storage is an awesome asset class. I got nothing bad to say about that. I would stay away from office
Mhm.
for sure. It's getting killed. I maybe you could do an office conversion to multifamily. People, see, here's the thing: people need a place to live, Kevin, and that's why I love multifamily. And I'm going to tell you, back in the 0809 crash, rents exceeded hear me carefully here. Rents exceeded pre-crash levels in less than 3 years after that major crash. So it bounced back fast. We've seen incredible rent growth the last few years, but it has definitely stabilized and starting to come down. That I just saw a report on CoStar in a market that we are in. It was a little sobering, because they're definitely seeing um, a lot less absorption. Absorption means people renting units, a lot less absorption, and rents are decreasing. So, we're going to be dealing with that in a lot of markets. And so, again, these guys that promised 3%, 5%, 10% rent growth every year on their pro formas, there are going to be some pissed off investors. And, and it could be worse. I mean, if they've got debt that's coming due and they can't refinance or sell, that's the definition of a bad day. You've got a nice cash flowing asset and you don't have the value you need to refinance it or to sell it. You're screwed, and your investors are going to lose their money, and that is going to, I believe that is going to happen. I hate to say it, I believe that is going to happen. To what degree, we'll see. But as far as asset classes, I love, obviously I love multifamily. I like
Mhm.
mobile home parks too. That's a great asset class. I know a lot about self storage. I love. I think office warehouse is also a great asset class for small businesses to have their own little operation. Those are the ones I'll speak to. I don't, again, I would stay away from office. A lot of people are living virtually now and working virtually now, and they don't want to go back to the office. So that's a whole dynamic. There was just a huge billion-dollar operator in New York that's just went into foreclosure with a bunch of office buildings. I think there was one in LA as well, and San Francisco as well. A lot of these big office operators are in deep doo doo.
Yeah.
So I would stay away from that.
Yeah. What are your thoughts, quick, on assisted living
Oh, I
and
think it's
where we're going?
fantastic. I think it's fantastic. In fact, I thought it was fantastic 15 years ago. I got the domain name affordableseniorhousing.com because I was going to get into it. I got licensed as an operator,
Oh, wow.
and then I just went off into multifamily instead. But I think it's an incredible opportunity. Now, that said, it's a very litigious business. You got to be really careful. You screw up and grandma gets hurt or worse, you're in big trouble. You could lose a license from multiple facilities. So you want to be really careful. But no, I believe it's absolutely awesome. I mean, it's 80 million baby boomers retiring, getting old. I used to say getting old and getting cold. When I talk to people about Florida, I was just too early. But it's happening right now. And same thing, like I just said, there's a ton of baby boomers that own businesses that are going to need to sell them, and they're going to have a hard time selling them. So it's going to be an opportunity there as well that I'm even considering myself. But yeah, no, assisted living, I'm a huge proponent.
Yeah, and I love your point on businesses. I just got
Mhm.
approached with an opportunity to purchase a business,
Mm.
and it's great because it's the same thing. Owners retiring, and it's I personally don't know much about that particular business, but what
Mhm.
I do know from being just in the ADPI sphere is how to automate things, how to run
Mhm.
a remote company, how to do.
Or yeah, yes, and yes. And a lot of these companies have their online presence is a
Is
freaking
it?
joke.
They don't have
These
it.
these
Doesn't exist.
retirees can't even spell the word technology. So there's a real opportunity to take a brick and mortar and bring it online as well. Possibly even do a roll up in multiples of the same businesses. Some real opportunity in that space as well. Again, I love that. I love talking about it. I'm good at it. I just don't have an ecosystem to support it yet. But I may. I've been thinking about it a lot. But I think there's opportunity there as well.
Yeah, well, I mean, Rod, when you're ready, we'll start buying some businesses. How's that sound?
I'm in. I'm
I'm
in,
in.
man. I'm totally in.
Uh, guys, this has been such Rod, such an incredible podcast for our listeners out there. If we wanted to
Thanks.
summarize everything that was going on here, I think some key nuggets here is number one, uh, you're very bearish on what's going on. We I think everyone here, and myself included, I think we all agree, a lot of listeners too, that there is going to be some opportunity coming
Yeah.
for folks trying to prepare for that opportunity.
Mhm.
Whether they have assets right now, if they could try to liquidate or try to get some cash ready,
Mhm.
maybe that could be an option. And
No, for
if
sure.
you have the single family assets, what about the people who have the single family assets? Maybe they missed the boat. What can they do to mitigate whatever pain from your
Just rent them
experience?
out. Just rent them out as long as you're cash flowing. Just take good care of your tenants. One of my problems was I was too spread out. I had properties in 2 hours north and 2 hours south of me and everywhere in between, and that killed me logistically.
Mhm.
So that was one of the biggest problems. But if they're centrally located and you can keep an eye on them, no problem. Just rent them out and forget about them for right now. Focus on moving into. Everybody goes from single family to multifamily. That's just the natural progression. And so, like I said, if you're driving, you can text the word links to 72345 to get to that website, Rod's Links, if you don't want to remember that, but you can
But
text links.
don't text and drive, people.
No,
Don't
no,
text
don't
and
do that. But text links to 72345, and and that'll take you to that website that has the boot camp on it,
Hmm.
the virtual boot camp. I don't sell anything there. Like I said, you can come for $47 and you learn every aspect of the business. I go through it all. It is drinking through a fire hose, but I tell you,
Yes.
I've never had a complaint other than the breaks are too short because I do 15-minute breaks every couple hours. But
Yeah.
again, remember the code ADPI to get that pricing, and you get a bunch of bonuses, the recordings, and a whole bunch. It's just a screaming deal. But
Yeah.
please take this advice. Don't sit on your laurels right now. Figure out what you're going to do and go freaking learn it right now, because opportunity is here. I'm not going to say it's knocking, it's here.
Yeah. It's
Okay.
already knocked and the door's
Yeah.
opening up right now.
Yes, it
So
is. Yes, it
uh,
is.
yeah, that's got some incredible advice from a true pro. Rod, thank you so much for taking the time to come on
Oh,
the show. You've
you know,
shared
I'd do
so much
anything for the
knowledge.
military, brother. You know that. I've helped
Love
Eric
that.
with veteran suicide, homelessness, the whole thing. It's just you guys. We live in the greatest country on earth because of you guys. So keep doing what you're doing. Thank you from the bottom of my heart, because I love you and I appreciate you.
Yeah, and hopefully, if your schedule's available, maybe we can have you come out for ADPI Con 2023.
Wouldn't that be something? Yeah. Well,
Yeah,
let me know. I'll very
we're
likely be there.
we're trying to figure out whether it's going to be in Atlanta, is it going to be in San Antonio, is it going to be in Nashville? We got bids out at hotels, and actually Eric is leading the charge in that
Okay.
department, and we threw on one hell of an event last year in New Orleans. We had Medal of Honor
Nice.
recipient Flo Groberg speak, and it was just
Oh, very
jaw
cool.
dropping, very
Very
cool.
cool. Very
But
cool.
thank you so much, Rod. This was incredible, and
Oh, thanks,
yeah,
Kev.
and thank you so much for offering your boot camp at such a reduced price for our
You bet.
members. I love that.
You bet. You bet. Good to
All
see
right,
you, bud. Thanks.
all right. See you next time.